Good morning and welcome to the BizNews Daybreak. Today is Friday, the 24th of April. I'm Kerry Lanigan. Up first, the latest overnight world news from Bloomberg News Now.
Israel and Lebanon will extend their ceasefire by 3 weeks, according to President Trump.
The president of Lebanon and the prime minister of Israel over the next couple of weeks will be coming here. They've agreed to an additional 3 weeks of no firing, ceasefire.
Trump also said the U.S. is going to work with Lebanon in order to help it protect itself from Hezbollah. Iran's Islamic Revolutionary Guard Corps reportedly laid more mines in the Strait of Hormuz this week. Axios cites a U.S. official saying the American military detected the Iranian mine-laying operation and it's being closely tracked. Meantime, the Navy is operating underwater drones in the strait for mine-clearing operations. Earlier today, President Trump ordered the Navy to shoot and kill any Iranian boats laying mines with no hesitation. Later in the day, U.S. Interior Secretary Doug Burnham denied this marked an escalation in the conflict. In the early hours of Thursday, U.S. forces boarded a supertanker carrying Iranian oil in the Indian Ocean. Jennifer Welch is chief geoeconomics analyst at Bloomberg Economics.
We're in this murky limbo where the ceasefire has been unilaterally extended by the United States for an undetermined amount of time. The blockade is still in place, which is technically an act of war. We have very real action happening on both sides, the Iranians firing on ships, the U.S. intercepting ships, a debate about whether Iranian ships are still able to make it through the blockade.
That is Jennifer Welch, chief geoeconomics analyst at Bloomberg Economics, speaking on Bloomberg's balance of power. Crude oil prices rose today with WTI and Brent each adding more than 3%. WTI settled New York trading at nearly $96 and Brent just above $105. The Trump administration is planning to extend a shipping waiver allowing foreign tankers to move oil and gasoline around the U.S. Now, under the Jones Act, crude oil, as well as refined petroleum products and other commodities being shipped between U.S. ports, must be transported on U.S.-built, owned, and flagged vessels. We are told an extension of the waiver from the Jones Act is set to be announced as soon as Friday. After the bell, Intel issued a strong forecast for sales in the current quarter. The company is seeing strong demand for its flagship Xeon server processors, thanks to strong demand from AI data centers. And we got reaction from Thomas Hayes, chair of Great Hill Capital.
Everyone is starting to direct orders to Intel, and I think we are early days. We're seeing it in the guidance, we're seeing it in the margins, and we're seeing it in the trends. LLMs and LLM training was all about GPUs. Agentic AI and inference is all about CPUs. And Intel is a leader.
Thomas Hayes, chair of Great Hill Capital, which incidentally does own Intel shares. The stock rallied by 20% in late U.S. trading. Major job cuts were announced today at Meta Platforms, and Microsoft is offering worker buyouts. More from Bloomberg's Charlie Pellet.
At Microsoft, the early retirement offer went out to thousands of employees in the U.S., with about 7% of the U.S. workforce eligible for the buyouts. The company had 125,000 employees in the U.S. as of June 2025, meaning about 8,750 workers could be eligible. Meanwhile, Meta Platforms plans to cut 10% of its workers in an effort to boost efficiency and offset its heavy spending on artificial intelligence.
Sankey Research President and oil market analyst Paul Sankey warns that the pain in energy markets may be far from over. Sankey sat down with our partners at Bloomberg yesterday.
You seem to think this is going to get very bad. And I just want you to spell out why, because there is a degree of comfort that people have got that we're on a de-escalatory path.
Well, the comfort comes from the fact that the tankers only stopped arriving last week. You know, it's a 40-day process. And so almost immediately what we've seen is the inventory numbers have now started to get scary, and it's just starting. But you're not at the stage of just outright crisis pricing. You know, you're not at the stage where American very low share of their income goes to gasoline, 3, 4, you know, it's 8, 9 in Germany. It's not that big a price. It's a sticker shock, but it's not really that huge an effect for the average American. Obviously, it's regressive and bad for poor people. So I think that the situation here gets worse simply because it's guaranteed. You know, normally when we're forecasting oil, we can be very, very wrong for extraneous reasons. In this case, we can be sure that the next 2 months is going to be an ongoing absolute disaster, even if you open the straits tomorrow, because it's just locked in by virtue of tankers. And the tankers are all in the wrong places. It probably means it's 3 months. So it's a very bad situation, and we're looking at where the supply chains are breaking. We've focused on Australia, on jet fuel. People are talking about solvents in Japan for chip making today. You know, you'll see where the cracks really start to appear. And then finally, there's another issue, which is emergency inventories. The first slug is easy to release. The second slug, you're going to release it, but you're going to be scared. And then there's a question of, can you really release the third slug? So the emergency inventories are probably lower in real, actual terms than they appear on your screen, and they appear very low.
In local news, speaking at the Soweto talk to the SARB forum in Joburg yesterday, Reserve Bank Governor Lesetja Kganyago explained how the Iran conflict could feed through to fuel prices, food inflation, and, if it lasts, interest rates in South Africa.
Things were in a good space. Our economy was beginning to grow, yet although it was creating jobs, still it was not creating jobs at the pace that we would like to see. So things were in fairly good space until the war broke out. And the war broke out. I can't tell you when the war will end. That's not what we do in the Reserve Bank. What we can talk about is the impact of the war on the economy. And the channel through which this comes through the oil price. For those of you who drive, I'm sure around on the 31st of March, you were all running to the filling stations trying to top up your tanks because you knew there was a big price increase that was coming. And I don't know any of you who have filling stations, but those who had filling stations pretended that they had run out of petrol so that they can sell it to you the following day at a higher price. And it was beginning to be felt that this is going to be a big shock for South Africa. And we saw that coming through the fuel prices. And fuel is very important because lots of other goods that we distribute across the economy actually need fuel. But the food we eat too, the farmers need diesel to operate their equipment on the farms, and which then means that they feel that cost, and at some point they will pass those costs through. Of course, what we had also seen is that the prices of other farming inputs, importantly fertilizer, was going up. But fortunately for South Africa, is that the planting season was already behind us. But we are going to feel it later in the year when the planting season starts again, because unless those prices of fertilizer comes from. Well, in South Africa, at least then, we have the fuel, even if we have to pay more for it. But elsewhere, people are talking about fuel shortages, especially in Asia, because the shipping corridor through which they receive the oil is actually closed to the Strait of Hormuz. And so whilst we are feeling the pain in South Africa that the fuel price is high, at least we have it. This prompted government to try and provide some relief, and so the Minister of Finance announced a reduction in the fuel levy of 3 rands a litre for 1 month to try and cushion the South African households. We do not know how long this conflict is going to last, but how you are going to feel that is through the fuel prices, maybe later through the food prices. The attitude of the South African Reserve Bank with things coming this way, we treat them as a shock, and we hope that it is temporary, in which case that if it is temporary, there is nothing for us to respond to. But if it becomes persistent, we end up having to respond to that shock. So, in a nutshell, that's how we are feeling the effects of the war.
Last night, BizNews editor Alec Hogg addressed the Hermanus Rotary Club to reflect on the success of the 8th BizNews Conference, which took place in March. Let's listen in.
Earlier this year, Jeanette and I went to a retirement home in Somerset West to say goodbye at the memorial service of Clem Sunter. Clem Sunter was a giant in South Africa, and the thing about Clem Sunter that sparked my memory was looking back at those 3 days of the BizNews Conference and those 28 speakers, the hundreds of people who came, and it's always sold out at least a month beforehand. So we're looking forward to the new conference center with maybe a little bit more people that we can bring in. But Clem wrote a book in 1993, which he sent me. I'm being a journalist, so you get these review books. It was called Pretoria Will Provide and Other Myths. And Clem was telling us back then, 33 years ago, that we're mad if we think that the government is going to look after us. The penny, 33 years later, from what we saw at what we call BNC 8, it's our 8th BizNews Conference, has finally dropped. Incidentally, there were 600 people in the room. I checked today, the recordings of the event have now been watched by 661,000 people. So for every one person in the room, 1,000 have attended by watching the recordings. 1.8 million videos. So on average, those 661,000 people have watched 3 of the recordings of the speeches. Hermanus is well known, I can tell you, as a result of this, not that it wasn't well known before. But it got even more well known because the US ambassador then stood up, had a speech which I thought was extremely positive. We want to work with you in South Africa. We want you to see the benefits of free enterprise. We want you to address this idiotic thing you call black economic empowerment, which we all know, everybody knows, is just a way of enriching your powers. He didn't say that, I'm saying that. But what he said in our Q&A conversation, I didn't goad him into it by any means. That's not my style. But he said, I don't care what your courts say. Kill the Boer is hate speech. Now remember, why would he say something like that? Because the previous 35 years, he has been working as his company is about analyzing the media, is about following the media, finding out what the media is saying, what they really do. In other words, is the media being pushed in one direction or another? So this is his world. And he says, kill the Boer is hate speech. That was the trigger that the ANC needed. They couldn't really take him on just about anything else, Steve, because his speech was so humble, considerate, and positive. In fact, I was hoping that someone in Pretoria would be, there were people from there in the room, but someone in Pretoria would listen to this and say, man, we got a chance now turning things around. I walked away from this conference with the engagement that I had with so many incredible minds, so many brave people who occupy extremely important positions in our country. I walked away from that being uplifted, realizing that, yeah, we got a mountain to climb. But at last, at least the majority of the people who think realize that Pretoria will not provide and that we need to do something to turn this place around because they ain't going to be doing it for us. And that, I think, made the whole exercise worthwhile. And I'm so pleased I've had the opportunity of sharing it with you tonight. Thank you.
In his Boardroom Talk podcast yesterday, BizNews editor Alec Hogg took a close look at three major shares in the BizNews Ricardo portfolios: Tesla, Sasol, and Teledyne. You can find the full analysis on biznews.com, TV, or radio, but here's a short clip.
Let's move on then to the Tesla numbers. They generated $1.5 billion in free cash flow. Operating income was just under $1 billion. This is for the quarter. And it delivered 358,000 vehicles. So there were more Tesla vehicles produced by Elon's company. And remember, these are highly sophisticated electric cars than were sold in South Africa in the past year. And those Teslas are up 6% on the prior year. But that's just the starting point. To truly understand the trajectory of this business, we need to listen to Elon himself. Here's a short clip from the conference call to investors that Elon Musk had last night. The first quarter conference call where he outlined exactly where the capital is flowing right now. And back to that Outsiders book, it's all about capital allocation. Here's Elon.
I think we've got a very exciting year ahead of us with 2026. We're going to be substantially increasing our investments in the future. So should expect to see a very significant increase in capital expenditures, but I think well justified for a substantially increased future revenue stream. And obviously Tesla's not alone in this. I think you've seen certainly the major technology companies substantially increasing their capital investments, and we're going to be doing the same. I think it's going to pay off in a very big way. So we're investing in and improving our core technologies, battery powertrain, AI software, AI training, chip design, laying the groundwork for significantly increased manufacturing production. We are also strengthening our supply chain across the board, batteries, energy, AI silicon, everything, and laying the groundwork for what we expect to be a significant increase in vehicle production in the future. And of course, actually releasing Optimus, but increasing our internal production for testing, and then probably being able to have Optimus be useful outside of Tesla sometime next year. As you've heard me say a few times, I think Optimus will be not just Tesla's biggest product ever, but probably the biggest product ever. And I remain convinced of that conclusion.
So let's bring our focus back to South Africa after all of that excitement. And we need to look at Sasol, a company facing a very different set of circumstances than Tesla. Sasol this morning published its business performance metrics for the 9 months that ended at the end of March. Well done, Sasol. You're right on top of your numbers. And they also provided some revised guidance for shareholders. Well, if Tesla is a story of exponential future growth, Sasol is a story of heavy industrial operation battling macroeconomic and environmental crosswinds in the here and now. But its share price is a rocket. It's doubled in 2026 this year and tripled if you look over the last 12 months. To understand Sasol right now, though, you have to take a look at the broader global chessboard. In today's report, management reminded shareholders that the ongoing conflict in the Middle East and the associated closure of the Strait of Hormuz, don't we all know about that, fundamentally reinforce the critical importance of domestic energy and chemical supply, i.e. what we at Sasol do. Gwedi Mantashe is out there trying to score political points by claiming South Africa's relationship with Iran, heaven help us, is keeping our fuel pumps full. Well, in fact, he should be praising the role of Sasol, as should all of those in government. It delivers a third of South Africa's petrol and diesel, and it's playing a vital role right now in keeping the South African economic engine running amidst some hectic global supply shocks. For instance, the Middle East conflict severely constrained the global supply of sour crude oil. There's different types of crude oil, but sour is a big one. A lesser management team than those that Simon Baloyi marshals at Sasol would have probably stumbled here, but Sasol successfully mitigated this by rapidly sourcing sour crude from other global regions, and the agility allowed the group's Natref refinery to actually increase production during the 3 months to end March. That's a rarity globally, supported by strong market demand linked to these exact energy security concerns. Well, lastly, for this episode, back to another of the US Ricardo portfolio stocks, the one I spoke about at such length earlier, Teledyne Technologies. And if you want to understand what a high-quality stealth compounder looks like, look no further than their first quarter earnings for this year, which have just been released, came out last night. For those who aren't familiar, Teledyne operates in the shadows of the biggest industries on Earth. It provides enabling technologies, the sensors, the imaging equipment, the highly specialized aerospace electronics that other companies simply cannot build themselves. So they have to rely on Teledyne. It's a little bit like an industrial version of the chip maker ASML, or indeed its biggest client, NVIDIA. Teledyne's first quarter was nothing short of spectacular. It reported net sales up 7.5% compared with the first quarter of last year. That top-line growth is great, but what investors really love is that the diluted earnings for the company came in 17% higher than the same quarter last year. That's exponential growth. And the operating margin, so you've got sales going up, and the operating margin expanded from 22% to 22.6%. That's a juicy operating margin. These aren't just good numbers, they're exceptional numbers that speak to serious operational leverage and pricing power. And in fact, the quarter was so strong that management, who are highly conservative, have now confidently raised their full year guidance. That's what they say to investors. We are going to make the profit we're going to make for the full 2026 year. Not bad, eh? Only one quarter in. Executive Chairman Robert Mehrabian noted in the earnings release that organic growth this quarter was the strongest in the digital imaging segment. Their sales were up 8%. And he said there's immense demand for infrared detectors and systems across space, airborne, marine, and land applications, as well as for their complete unmanned aerial systems. Think geopolitical climate right now. There's demand for high-end surveillance, for drones and imaging, and it's pretty much insatiable. Governments are just going mad for this stuff as they now start to rebuild their defense structures. And Teledyne is supplying the picks and shovels for this gold rush.
That's your BizNews Daybreak. I'm Kerry Lanigan. Thanks for listening.